global markets are reacting sharply to breaking news of an agreement between the United States and Iran. This significant development has immediately triggered a dramatic shift in commodity and equity prices worldwide. As news reports emerge, investors are recalibrating expectations, leading to rapid market movements. The announcement is confirming the release of several U.S. citizens from Iranian detention, in exchange for the release of Iranians held in the U.S. and access to frozen Iranian funds. This diplomatic breakthrough is reshaping immediate economic outlooks and creating an urgent sense of revaluation across key financial sectors, as traders absorb the implications of reduced geopolitical tension and potential supply shifts. One of the most immediate and pronounced effects of the U.S. Iran deal is a significant drop in global oil prices. Benchmark crude futures are seeing substantial declines as the news breaks. Analysts point to the potential for increased Iranian oil supply entering the market, alleviating some supply concerns. This prospect alone is enough to send prices downward. The market is factoring in the possibility of more oil barrels flowing, even if a full return of Iranian crude faces hurdles. This sudden shift indicates how sensitive the energy sector is to geopolitical developments and future supply expectations. While oil prices plunge, major stock indices are experiencing a surge. Investors are responding positively to the de-escalation of tensions between the U.S. and Iran, viewing it as a move towards greater stability. This perceived reduction in geopolitical risk often translates into increased investor confidence, driving stock prices up. The positive sentiment is broad-based, affecting various sectors, particularly those sensitive to global economic stability and energy costs. Reports from financial news outlets confirm strong opening rallies across key equity markets, signaling a collective sigh of relief from traders hopeful for a more predictable global landscape ahead. At the heart of this market-moving announcement is a prisoner exchange deal between Washington and Tehran. 5 U.S. citizens, currently held in Iran, are to be released, along with 5 Iranian citizens held in the U.S. Crucially, the deal also involves the unfreezing of approximately $6 billion in Iranian oil revenue. This money, held in South Korea, is now accessible for humanitarian purposes. This exchange mechanism is the immediate trigger for the broader diplomatic shift. While the deal is not a full nuclear agreement, it represents a significant, albeit limited, thaw in relations, easing immediate tensions. This step is pivotal for understanding the market's reaction. The impact on energy markets is profound, driven by the prospect of more Iranian oil. Iran possesses vast oil reserves and has historically been a major exporter. While sanctions have curtailed its output, any agreement, even a limited one, hints at a potential return of more barrels to the global supply chain. This comes at a time when global demand is fluctuating, and concerns over supply stability have kept prices elevated. The market is now adjusting to a scenario where increased supply could temper prices, offering a potential reprieve for consumers globally. This immediate effect shows how global energy security relies on complex international relationships. On Wall Street, the reaction is unequivocally positive. The Dow Jones Industrial Average, S&P 500, and Nasdaq Composite are all posting significant gains following the news. This broad market enthusiasm reflects a renewed appetite for risk among investors, who often shy away from geopolitical instability. Financial analysts are noting the rally is driven by hopes that this limited deal could pave the way for further de-escalation or even broader diplomatic engagement in the future. Reduced tensions in the Middle East often translate into more predictable economic conditions globally, benefiting multinational corporations and consumer spending confidence. The jump suggests a collective optimism in the financial community. Market analysts are quickly weighing in on the implications. A senior energy analyst, speaking to Bloomberg, stated, "This agreement, while limited, injects a dose of much-needed predictability into a volatile market." The mere optics of dialogue can shift sentiment profoundly. This sentiment reflects a cautious optimism, acknowledging that while challenges remain, any diplomatic step is preferable to heightened confrontation. Other experts are highlighting the potential for this to be a precursor to more comprehensive talks, especially concerning Iran's nuclear program. Such forward-looking analysis underscores the long-term potential of this current diplomatic opening, even as immediate market reactions stabilize. For everyday consumers, a sustained drop in oil prices could eventually translate into lower prices at the gas pump. While the effect isn't immediate, continued downward pressure on crude oil typically flows through to refined products like gasoline. This offers a potential silver lining, especially for economies grappling with inflationary pressures. Lower fuel costs reduce transportation expenses for businesses and individuals, freeing up disposable income. The extent of this impact depends on various factors beyond crude prices, including refining capacity and local demand. However, the initial market reaction hints at a potential positive outcome for household budgets globally, providing a direct benefit from de-escalated tensions. The ramifications of this U.S. Iran agreement extend beyond just oil and stock markets. Gold, traditionally seen as a safe haven asset, is seeing its prices decline as geopolitical risks recede. Currencies, particularly the U.S. dollar, are also reacting to the shifting global outlook. Furthermore, industries heavily reliant on stable global supply chains and energy costs, such as manufacturing and logistics, could see long-term benefits from sustained de-escalation. The interconnectedness of global finance means that a significant diplomatic move like this ripples through almost every sector. It underscores the broader economic benefits of reducing international friction and fostering diplomatic engagement, impacting a wide range of investments. Official statements from Washington and Tehran are confirming the prisoner swap, emphasizing the humanitarian nature of the deal. U.S. President Joe Biden's administration views this as a limited, but positive, step. Iranian officials, meanwhile, have clarified that the unblocked funds will only be used for permissible humanitarian goods, such as food and medicine. Both sides are cautious in their language, avoiding declarations of a broader rapprochement, yet the willingness to engage diplomatically is evident. This measured approach suggests a delicate balance, where both nations seek specific outcomes without committing to a full overhaul of their complex relationship. The careful messaging is crucial in this high-stakes environment. Looking ahead, the question remains whether this limited deal can pave the way for broader diplomatic progress. Analysts from the Council on Foreign Relations suggest that while this specific agreement addresses a humanitarian issue, it does not directly resolve core disagreements like Iran's nuclear program or regional influence. However, it establishes a channel for dialogue, which is crucial for future negotiations. The market's optimistic reaction indicates that any reduction in geopolitical friction is welcomed. The coming weeks will be critical in observing if this momentum translates into further engagement, or if it remains a standalone agreement, leaving larger issues unresolved for now. In summary, a U.S.-Iran agreement involving a prisoner exchange and the unfreezing of Iranian funds has sent oil prices tumbling and stock markets soaring. This development signals a significant, if cautious, de-escalation of tensions, with immediate financial ramifications across global economies. The impact on energy markets is pronounced, with potential benefits for consumers, while investor confidence sees a major boost. This is a rapidly developing story, and its full implications will unfold over the coming days and weeks. We will continue to monitor all angles, bringing you the latest updates as new information emerges. Be sure to subscribe for real-time news alerts.